Hello, I would like to take you through this short presentation to help explain Pillar's construction financing program. I will run through some examples of deals we have financed recently, followed by a breakdown of costs for a typical residential construction deal. There are many reasons for your clients to use Pillar instead of the bank for construction financing. Ease of cash flow, flexibility on draws, and qualification based on ratios are some of the main reasons. Before we get started, I would like to set the general parameters for a construction deal. Pillar will finance up to 80% of the completed value of a residential project. Pillar will ask for confirmation of takeout financing upon completion of the home. In the case where the borrower does not qualify with another institution for takeout financing, the applicant will have to qualify under Pillar's mortgage guidelines. The borrower will have to illustrate their ability to complete the home with the funds that are available, including Pillar's first mortgage, equity from the borrower, and any secondary financing. In the case of a contractor-built home, Pillar will want to see the contract. If the home is a self-build, the borrower will have to show a breakdown of all labor and material costs. I will explain the draws and payment of interest at the end of the presentation. Our first deal is the largest development project that Pillar has been involved with. The reason I have included it in our presentation is to make you aware of our ability to fund subdivision projects that have received draft plan approval. We normally can advance half the value of the land on closing. Further advances are based on the completion of various stages of the project, such as roads, utilities, stormwater management, etc. The next deal is an example of a commercial redevelopment of a property in a large urban center. This project was a little scary because it started with the total demolition of the inside of the structure, leaving just the four walls. The developer then added a third story and created 6 condominium units. The 2 units on the top floor are owner-occupied, featuring a walkout patio garden with a stunning view of the inner city. Takeout financing is in place once the condominium is registered. A strong client and a good plan facilitated this deal. The following deal illustrates the majority of construction deals Pillar funds. New home construction by an experienced Tarion builder. There are many reasons why a client may use Pillar in this circumstance. The builder may not qualify at the bank because of credit issues or lack of satisfactory financial statements. Some builders use Pillar because of the ease of cash flow. Draws can be arranged on a weekly or bi-weekly basis to satisfy payroll commitments. All new homes sold in Ontario must be Tarion insured. Not my rule, but that of the province. Pillar will require a Tarion certificate in the case of a new home to be sold. In the case of a true self-build, Tarion is not required. Pillar has had the opportunity to finance many infill projects. Older homes are bought on desirable city lots, torn down, and newly constructed. Traditional bank financing is difficult to get when the original home is being torn down. The next view is that of a large, beautiful home, again built on an inner city lot where the original home was torn down. In the case of a self-build, clients will have to submit a detailed plan of construction, including an estimate of all costs. Pillar will finance the completion of construction projects in cases where the original financing was not sufficient. The first mortgage must be paid out and replaced with a new first from Pillar. In this case, the borrower qualified with Pillar for financing upon completion of the home at a reduced rate. Flexibility is one of the keys to Pillar's success in the construction financing niche. In this deal, the borrower needed funds to pay out family members who shared in the inheritance of the cottage. The borrower then completed renovations using funds advanced based on the completed value of the project. Probably one of the most beautiful renovations Pillar has witnessed. This developer made a healthy profit when he was able to sever the property, complete an extensive renovation, and sell both sides for a profit. This proposal is based on a $400,000 completed value financed at 80%. Your borrowers will not have to make regular monthly interest payments, which could be cumbersome or inaffordable. Pillar will deduct the accrued interest from each successive draw. Remember, the borrower can have as many draws as they wish. Each draw is charged $250, which pays for the appraiser inspection. The last slide shows the draws, fees, interest, and net funds available based on draws every 30 days. This chart is an example only. The borrower has the flexibility of requesting draws when they need them. You can see the combination of fees and interest is just over $10,000. There are two main selling features of paying this amount. The builder owner is trying to earn or save generally 15% of the home's value, or $60,000 in this example. The $10,000 in interest and fees is a small part of the gross profit. The second selling point is the borrowers may not qualify at the bank for credit reasons or excessive ratios. As always, please call your local BDM or underwriter if you have any questions.